Good morning everybody, welcome back to my channel. My name is Rob Keating and I'm here to help you navigate the wall of information that is the stock market. Firstly, the last video I made, which was based around Netflix and where that money's going to go. If people are pulling themselves out of Netflix and not watching so many movies online, then what are they doing? Now what I did in the last video is identify this sector, consumer discretionary. This is people buying things, household durables, hotels, multi-line retail, that sort of thing. Then narrowed it down to specialty retail here with apparel, computer hardware, home improvements, that sort of stuff. Then there was this article about airline stocks. Airline shares are flying high today and American Airlines was up in the pre-market. And I identified these two companies here, Deckers and Steve Madden, saying they are mid-range retail companies. Now, as you can see from the chart, Steve Madden was up yesterday, Deckers was not. However, yesterday the airlines went freaking crazy. United Airlines, Norwegian Airlines, SkyWest, Ryanair, American Airlines, they're all up based on this news here. United Airlines sees return to profits. This is the first time this company's had profit in the last 2 years since the pandemic. This news is absolutely massive. This is the biggest thing that's happened since I started doing this channel more frequently. And what I want to direct you to is luxury goods here. In the last video I was talking about retail, higher end goods, not thinking there was enough momentum to, I think the company I spoke about was Prada, but then things like Hugo Boss and Burberry are aligned with those two things there. Now, airlines being up means people are traveling more, they're spending more, so there's been this huge push towards these luxury goods here. The list includes Pandora, Louis Vuitton, Swatch, there's a whole bunch of companies there. And from the last video, I was talking about Lululemon. Lululemon is the athletic company who are talking about doubling their revenue until 2026, doubling mostly menswear. However, they're currently pushing women's shoes. So that doesn't add up and the share prices are down yesterday. So that is good for the channel as well. Thank you for watching, by the way. And this Lululemon thing, they're talking about creating this immersive experience, mostly for men. They're going to have this app and this online stuff. And it's like, this has been done before. Does anyone remember this insanity stuff that was around 10 years ago? You're going to get in great shape. Your life's going to be amazing. You're going to do all this stuff. So many different companies have tried it and it just never works. Peloton tried it. They're down 78% in the last 6 months. They're trying to get this, at home, let's all go for it kind of feel. It's never going to work. The only thing that's done this to date that I can think of is CrossFit. It's creating this fitness user, we're all together because, you have to go to a CrossFit gym and partake and build relationships and stuff. So Lululemon, good luck with doubling your revenue until 2026. 20% from what you're talking about? Yeah, I imagine. Anyway, along with this airline thing, there's also the Federal Reserve who are about to raise the interest rates. Quite simply, when the interest rate goes up, stocks come down. If you'd like to learn more about that kind of thinking, I highly recommend this video here by Ray Dalio, How the Economic Machine Works in 30 minutes. That'll take you through how it all moves together and how it works. What also happened is these recession stocks I picked out a while ago, Dollar Tree, Dollar General, Five Below, all pulled back yesterday. This airline thing indicates to me there's less likely chance of a recession. Now, one of the banks, I think it was JP Morgan, said there was going to be a 35% chance of a recession in the next 2 years. And that's sounding less and less like. And these stocks pulling back yesterday indicates that might be the case. And then this also happened as well with renewables. Now, this is renewable, clean, green energy. Now, I've sorted it by the price change, starting with minus 9.49, minus 9.23, minus 8.65. They're solar panel at home stuff. So why would renewables pull back on the same day that airlines go higher? I found this article here, why renewable energy stocks plunge today, higher interest rates are hurting renewable energy stocks today, rates were expected to move higher but the speedy rate of change is what's jarring to investors. For renewable energy companies this is unwelcoming news because most are borrowing money to fund projects and intending to pay bad debt through revenue generated in years to come. So what he's saying is because the interest rates are going up, renewables went down. That doesn't sound right at all. If that's the case, then wouldn't Tesla have done the same? Tesla's been running off borrowed money for decades and didn't move with interest rates, they moved because of the company. So if you look at this S&P Global Clean Energy Index. This is clean and green energy. What you have here is the last 5 years, with one of the high points being January 8th, 2021. Now this is just after Biden came into power. He's massive on green energy, massive on getting this stuff up and running. He obviously has the power to make that stuff happen. If I look at these green energy companies here, you can see I've sorted it on the right hand side by 5 years, and just towards the right of the charts, they all rocket. Now this is to do with Biden coming into power. It was the green energy boom. So if it's interest rates, then that to me doesn't make any sense. To me, green energy is policy. Interest rates doesn't really matter. If it was interest rates, then again, the Tesla, which was running on borrowed money, would have moved the same, which it didn't. That doesn't add up to me. If I go back to one of my first videos, I'm talking about oil and gas here. I picked out these 5 companies here and kind of go over the craziness of the oil markets, how it's correlated to each other and how it works in sync, and how different companies exposure or their US pipeline exposure, or because they're not even an oil gas company and more of a shale natural gas company, they all move differently. So I wouldn't say renewables is to do with interest rate. I would say this airline is taking a bit of time just to kind of play its way through the markets, but coming out of renewable energy implies to me people are going to be less interested in doing it because they're more interested in getting things back up and running. If people are on planes, then my opinion, things are going to start happening in the markets. But the company I identified in that video, CNX Resources, are still up 5.89% with a pullback yesterday because of what's going on. That's this video here. And then yesterday, Netflix was down again, another 3.52%. We're saying number one is do not buy Netflix. Also this, hotels and entertainment services. A lot of them were up yesterday on the FTSE 350. That's the UK companies. The one at the top, SSP Group PLC, they actually supply the foods to airports, railway stations, all these things you pass through as you travel, and they're up 5.3% yesterday. This to me indicates that this airline thing is real, and the money's also moving to companies correlated to the travel sector. And you can see how everything affects everything else. This one headline yesterday, United Airlines sees a return to profit, has played out in many different forms, because if all the airlines are up, then what is really going on in the world? What is going to happen next? We've seen the luxury retail increase. That you can kind of see the match between those two and how that would work. What I did notice yesterday on opening was this. That's US opening, 2:30 UK time. This company here, Pool Corp. Pool Corp is the world's leading distributor of swimming pools, supplies, equipment, and related outdoor products. Now they were up 5% on the opening. If I look at the chart here, they rocketed up on the opening, but ended negative 1.25. Now that's a good thing, because swimming pools it's people's homes, it's spend, it's capital investment, it's where are all these people getting this money from to suddenly buy swimming pools all of a sudden, when people who could have afforded it probably would have done it during coronavirus with all the stay-at-home stuff going on. Had that stock ended higher, I would have assumed somebody somewhere wasn't doing their job properly in terms of credit lending or something that wouldn't have added up. So I'm very glad that actually ended on a low. But that's the kind of stuff to look out for. Like, how does this stuff work in the real world, and what does that indicate is actually happening in the world outside? So we ask ourselves, what's going to happen next? Airlines are up, luxury is up, hashtag I kind of called it, green energy is down. There's something going on with the recession play. Money's being pulled back from these dollar store companies. That's this video here, if you want to watch it, Recession Stocks. Netflix is still falling, and CNN Plus is now shutting down. CNN shuts down its streaming service less than a month after its launch. Now, in the last video, I was talking about my favourite book about the stock market is this one, The Encyclopedia of Human Behaviour. That's this video here. Now, what I'm trying to get at is the stock market is how people make decisions and their behaviour and how everyone sees everything. And I got this little model here, which is just two people and their information they know and they don't know. I'll give you an example at the end. But what we want to try and do is, from the 11 S&P sectors here, get a sense of where things are going. We've got energy, materials, industrials, utilities, healthcare, financials, CD, CS, IT, communication services, and real estate. Now, those are all the stocks. That's how we break it down so we understand what on earth is going on. I've also got this sectors list here, which breaks it down a little bit further. But right now there is an awful lot going on. I think this airline thing will take a few days to play out. That is, things will be up, down, left and right while people are trying to understand what's going to happen next, and people put money into things, hence the investment game. The renewables thing as well, that's a very deep and complex topic. That's wrapped up in green energy, climate change, government policy, all that kind of stuff. That again is going to take a bit of time to play out. The obvious thing from airlines is hotels, but those are already up a little bit. And from luxury retail, that's obviously higher end spend. What we can do here is look to the east, the Far East, that direction behind me, to the A50. The A50 is China's 50 largest companies. So in China you have like the Shenzhen and the Shanghai indexes. The A50 is those brought together. So what I did is I sorted this by today's price change. If you look at the names of the companies, Hangzhou Electronic Materials, China Merchant Bank, China Communications, China Railway, New Life China Insurance, China Life Insurance, Cement Co, Construction Bank Corp. If you look at the lines on the right hand side where I've sorted it by 5 days, you'll see they all tick upwards over the last day or two. Now what I've done is I've taken the two ones from the top here. The first one, Hangzhou Green Electronic Material Co. Over 5 days it's up 13%, but over the last day it's up 7.23%. The same with China Merchants Bank, up 3.57%. That's technically today because they're ahead of us. So you can see how this one little thing, United Airlines sees a return to profit, can affect everything else. And again, I think this is the biggest thing that's happened since I started doing this channel more consistently. So what is going to happen next? Something is going to happen. Consumer is quite fuzzy at the moment. Consumer spending tends to be quite easy to correlate because it tends to be retail, home, cars, holidays, that kind of stuff. What I'm really looking for is decisions. Who's going to decide what based on what they see? I've got this little map here which indicates these 4 little points of you've got somebody who wants or desires something happens in the market, somebody sees it and somebody else responds. So as an example, Netflix is down by 200k. So Warner Brothers decides to cancel CNN. That decision to cancel CNN is then thrown back into the bucket of information, that is the stock market, so we can carry on. Now, by creating this loop of decisions, you can work your way through information and start to navigate the wall of information. That is the stock market. And that is the end of today's Yellow Brick Road. If you like this video, please like. If you want to see more, subscribe. Any questions, please fire away, and I'll see you in the next one.
See the wizard.